The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the April 15th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's go take a look at an empowering thought, about my favorite subject, contribution. It's not what we get, folks, but who we become and what we contribute that gives meaning to our lives. Life is a gift, and it offers us the privilege, the opportunity, and the responsibility to give something back by simply becoming more. And those who've learned the power of sincere and selfless contribution, well, they experience life's deepest joy, true fulfillment out there. Let's go take a look at the fulfillment going on in the marketplace here. If not on cue, that 1576.09 was hit just as we were coming on the air. That's the S&P 500. That's what we're looking at right now, trading out at 1575.43. Today is going to be an important telling day for sure. Why? Because last week on Wednesday, on April the 10th, as the S&P plowed through the 2007 high of 1576.09, it did it with some conviction from a candle standpoint. Volume-wise, not so much, but from a candle standpoint, it most certainly did. Today is going to give you the first indication as to whether or not this breakout was for real. Why? Because you're coming back and you are testing that breakout area, 1576.09. That's the number to be paying attention to today. Probably will be for a period of time until you see a clear break. Well, today, if you see a test, we've seen the test. The question is now, is there a close above 1576.09? Is Uncle Ben or Super Mario lurking in the woods out there, or if they just had enough and they're going to throw in the towel for a while? We'll see. Or maybe it's you and many others that might want to go ahead and buy this little dip here. I say wait for the test here. You get a close below 1576.09 today. Now, there's other support levels, but it's your first indication that it was a false break topside. We'll have to take a look at volume and whether or not you're getting volume off of the highs. We know we're getting volume off of the midsection of gold and silver as that continues its assault downward out there. So 1576.09, next level of support. If you get a close below 1576, is going to be really the low of that swing point from October 11th, 2007, 1546.72. So those are your numbers on the S&P 500. Let's go take a look at the Dow. The Dow forming one of those very cool candles on Friday. You don't get to see these that often. And inside the Dow, you're looking at, if you take a look at Friday's candle, you are looking at a dragonfly doji. Look at that, folks. It opened and closed at virtually the same price point. The open was 14,865.14. The close 14,865.06. You can't get too much closer than that. 8 pennies out there. Now, Dragonfly Doji, also a version of a hanging manish type candle as well. Now what you're seeing here is a move lower. Of course, that creates the evening star candle setup. That is a 3-candle formation, so you are seeing a little bit of a reverse. Now, the last time we saw the evening star, that's really where we're going to be taking a look at support out here. That was the, it wasn't an evening star. It was a bearish engulfing candle. My bad out there, but quickly corrected. That was the bearish engulfing candle on April the 3rd out here. That bearish engulfing candle, that was, the high there was 14,680. I'm sorry. The high was 14,683. The prior 14,684.49. The prior session, April 2nd. So while the S&P obviously is on 1576.09 watch, the Dow today, or the Dow period, is on the watch of 14,684.49. That would be getting into a support area. It should be the support area inside the Dow. Let's go take a look at, and, you've got, let's see here, what other bullish candle formation. With inside the Dow, you had a little bullish engulfing right here, bull sash candle right on around March the 26th out there. So there is some support inside the Dow. We'll see how that does today. Let's go take a look at the Russell 2000. Russell 2000, really a weak link out here. In fact, leading the charge to the downside, off 1.5% this morning, down 15 points, trade out at 927.87 out there. If we take a look at, you can see the support level inside the Russell 2000. If you're watching us on Tiger TV, maybe you're listening in on the radio, maybe you're listening in on your mobile device at tfnn.mobi. Thanks so much for doing that. Remember, you can always catch a live stream of this show by going to the homepage of tfnn.com. No other better place to be. Over on the right-hand side, you'll see that button with 3 smartphones. Click on that. You'll get this show streaming live. If you're listening in otherwise, audio-wise, you want to catch the archive, Channel 10 is the archive on Tiger TV to watch this show. So we see a shooting star out here as the Russell 2000 made its way back to the highs on April the 11th. Of course, that was coming into this little evening star reversal formation. You had 2 of them out here. You had the first evening star, which was the candle session of March 14th, 15th, and 18th out here. That set up some resistance at 954. And then you came back a few trading sessions later, meaning March 27th, March 28th, and April Fool's Day. That set up your next evening star, so you got a formidable line of bears just hanging out inside the Russell 2000. The bulls here are hanging out right here at the gap up from March the 4th. That area has been defended once. We'll see if that can get defended again. You're watching for 916.69-ish or so, or you could use the swing point from April the 5th out there. A close below 909.90 says avalanche below inside the Russell 2000. Let's go take a look at let's go take a look at the NASDAQ. Take a look at the NDX. As soon as I can find it, here we go. As we take a look at the NDX 100, the NDX breaking that 0.786 Gartley sell pattern in the last 3 trading sessions, running up against the gap down. Now, there's a gap down from September 21st. The low of that candle from September 21st is 28.59. It gaps down the very next trading day on the 24th. That high was 28.49. So it's the low of the session, the swing point from September 21st out there, that is acting as a resistance level. That was really tested in essence back on September 25th, and then 3 other times, we'll say, April the 10th, April the 11th, and then on Friday as well. This morning here, if you take a look at for the next, now this is going to be unusual to see how this plays out, because this 0.786 Gartley sell pattern, that absolutely failed. There's no question about it. It failed as price moved up into that September 21st area. So it made a 100% move of a move, and we're really going to need to see some real pullback here in the NDX 100. Right now, you've got Apple down $5, Google off $4, Priceline down about 10 out here. But now we'll go take a look at the ETFs. We'll see what kind of volume we've got inside the Qs. But oftentimes, that not just often, not like 51% of the time, a majority of the time when a 0.786 Gartley fails, especially one like this, it typically will turn into a butterfly out there. So we'll see how this one plays out. But it is going to be very important, not just to be paying attention to the Russell, the S&P, but certainly the NDX as well, because you like to see unified signals. Talk about some unified signals. We got that 3 drive to a top pattern here inside the New York Stock Exchange. So that was forming that pattern on Thursday last week as it made its move to 92.56 out here. So we've got really 2-3 drive to a top patterns that are truly in play out here. One inside the U.S. dollar, Japanese yen currency pair. The other right here inside the New York Stock Exchange. Now, those 3 drive to a top patterns, those are the bear, in this case here, 3 drive to a top, the most bearish pattern out there, other than really an island reversal at being able to call market top. So we are coming into sell in May. Just may have been sell in April 15th. But we'll see. We'll go take a look at the volume. But really, it's the volume at the end of the day out there. So you got that 3 drive to a top, and also right now running into a area of support. We'll see if it can break this. That is the March 15th level out here. Looks like there was a little bit of a gap down. So be paying attention to 909105. It's traded at 909109 right now. That's on your NYSE. Let's take a look at. Let's take a look at this chart. I got to switch over to tabs here. But let's go take a look at this. Give me a moment here to pull this up here, because this is a beautiful pattern, quite frankly, and it's the XAU. And this pattern here is going to complete way sooner than I thought, and then we'll see how well it really completes. And that's this .786 Gartley buy pattern. This is the XAU, folks. This is the weekly chart on the XAU. 106.23, that's the number here on my screen. I'll go ahead and draw the Fibonacci numbers, but this is really a beautiful pattern. This pattern here is so strong. When you take a look at Fibonacci numbers, you're taking a look at a 1.618 expansion. Again, we're looking at a weekly chart. This is the XAU. And if you take a look at the expansion, which would take you to the D point. So if we look at the expansion of the B to C level, you'd be looking at the low of May 18th out there. That's 140.94. All the way up to the high that was put in on September 21st out at 196.72. A 1.618 expansion of that dollar value. You take the difference, that dollar value, multiply times 1.618, subtract it from the high of September 21st out there. That takes you into that 106.23 range. Well, guess what? So far, we've hit 106.38. That is close enough for the range out here. And what's important about this is that if this pattern fails, well, you're looking at the XAU moving all the way down to $64.10, $64.10 up to $86.52. That'll take you all the way back to the October 31st swing point. That would be the 100% move of a move. What I mean by that, folks, I would take you all the way back to where the lows were put in back in October of 2008. It went from the lows there all the way up to highs that were established back in December of 2010 out there. A 100% move of a move says you come all the way back to that major swing point. But first, it needs to get through this 106.23-ish area. Let's take a look at the exact retracement level coming off of the lows back in 2008 all the way up to the high that was put in here. Give you the exact number is on the .786 level is 99.73. So somewhere between 99.73 and 106.23-ish, we should see some type of reversal inside the XAU out there. You can see also the XAU truly moving into very oversold conditions. Last time we saw that move into those type of oversold conditions, we saw a pretty significant bottom out there, and that was in that October 24th, 2008 time frame. The only other times down in the RSI on the weekly chart, you saw lows come in, and this was the let me go ahead and put this study on the screen here. The RSI only getting down to the 35-ish range back in May of 2005. Again, we're looking at a weekly chart, and then again in the 35-ish range in May of 2004, and both those set up some pretty nice lows in the marketplace. Even if we go back further, you're taking a look at November of 2000 out there in the XAU. So getting into this extreme oversold territory, making this nice weekly Gartley buy pattern. All we need now is we need some bulls to show up. You don't need to be the first bull in here. In fact, you don't need. All you got to do is just watch the charts out here. That's what we're going to do here at TFNN. When we get back, we're going to go out to Mike in New Jersey and take a look at Chipotle CMG. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow off 103, S&P 1576.11. It is tackling that line out there. The line is drawn in the sand at 1576.09. Let's go out to Pennington, New Jersey. Mike, thanks for calling. Thanks for holding. How are you this morning?
Good, Steve. How you doing today?
Excellent, excellent. You're taking a look at Chipotle?
Yeah, their earnings are Friday. Somebody upgraded them this morning because they're catering now.
Ah, okay. I'm not sure, but it's hard to. So they're in the catering business, a fast food restaurant.
Yeah, that's
yeah. How about that? So yeah, I see. It looked to me like their earnings are going to be released Thursday after the bell.
Okay.
Are you in it? Looking to?
I have a couple of out of the money puts. I have two 315 and one 310.
Okay.
I'm thinking about adding one.
So if you take a look at Chipotle, let's take a look at both the daily and weekly charts here for Mike. If we take a look at the weekly chart out here, you had that big gap down as a result of a earnings miss, back in July 20th, 2012, folks, 9.7 million shares. At the close of the prior session, at its high or close to its high, 403.86, and then absolutely fell out of bed on that earnings release. Got down that session down to 307. So that was one heck of a move. Then what Chipotle did here in the ensuing period, it made a swing point inside the gap out here. that was created because of that earnings release. On September 17th, it got up to a high of 351.80. It's trading inside that candle right now. Now, that has 1.1 million shares, and as it got up there, actually had some pretty decent volume, Mike, on the way up, 947,000 shares. On April the 10th. It had some decent volume come out of it, 1.4 million shares on April 11th, and then fought its way back on a Friday on light volume. So I see what you're looking at. This is where your back is up against the wall here, certainly on the daily. Today it's tried to move higher, but it's sold off on, I guess, that upgrade news out there. It opened at 342.60. Volume so far, 340,000 shares. It sets up a, over a million share day. You'd like to see this thing get outside of that swing point today, get down into the below 338 out there, because as long as you're inside a swing point, this thing can go test. Now on the weekly, let's go see what we see out here on a weekly chart out there. And on the weekly chart, inside Chipotle, you can see it also had a couple of bearish candles out here, one that's trading above, the other it's trading into. So this session here on March 8th was a little shooting star candle. That high out there, 334, you're up and above it. That should have been an area of resistance. And running into the next shooting star, which is the week of September 21st, 2012. So if 351 does give way, this thing will head up to about $365. But I see what you're looking at. And the only problem here, let me just take a look at last week's volume. Let me see here. Did you look at last week as on a weekly chart at all?
I looked at it like about 2 weeks ago when I first bought the put. So
you
I have them now this week.
Okay, perfect. So last week it did 4.4 million shares, moving into 3.385. So it's actually pushing that swing point from September 21st with volume, and obviously it's inside that downdraft there. So it's not as easy for, you're up from a resistance standpoint because of that gap on the daily basis and those candles, but it's pushing into the swing point with volume out here. You would have loved to have seen it actually fail. I don't think it did that, because that high was 351.80, and last week it got up to it did. Got up to 350. No, it didn't get up there. So it kind of snuck in right behind it. I'm not sure what to tell you. When you push a swing point with volume, it says that it wants to move up in there. You'd like to see on a day like today. So here's maybe how you take a look at it. On a day like today, with the market trading down as hard as it is right now. I haven't looked at the volume yet on the ETF structure. With it, the Dow off 86, S&P off 11. You would like to see this doing more than gapping up, which is what it did this morning.
Yeah. Well, I see a lot of the down moves, the volume is really large on all the down moves. And the up moves, the volumes to me look really small on a daily basis going back.
Yeah, no question. You had some nice movement on Thursday to the downside with 1.5 million and some light volume, on that next trading session. I see that. You've already got two contracts out there that, so with this pushing weekly into that swing point, it might be good enough. All right, Mike?
All right, good. Thank you.
You bet. Thanks for calling. Thanks for asking. 877-927-6648. Dow's off 84. We'll go and take a look at Goldilocks Silver, light sweet crude. Right now, gold off 108, trading at $13.93, on its way to $12.70.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. S&P Watch 1576. It's at 1578.05 right now. Let's go peek in on the ETF structure, and then we'll go take a look at gold, silver, the commodity sector, see what's going on both intraday, weekly, daily, and so forth. So as we take a look at the SPYs here, we've been trading for just over an hour. Volume 31 million shares, 31 million shares going against the move up, that breakout session from last Wednesday with 135 million shares. So volume now, if I go over into the 10-minute chart here real quickly, if you're watching on Tiger TV, you'll see the volume actually has been pretty steady here on the 10-minute chart. The open, you expect the most volume there, 5.3 million shares, 4 million after that, 4 million after that, 4 million, 5 million after that session. Another 4 million. So really steady. The last 30 minutes, which was coming into 10:30, quieted down just a tad, down to 3 million. But pretty steady here volume on the 10-minute chart inside the SPY. So if we go back here, if that volume were to continue, you could just simply take 31 million times 6.5. That gives you 180 million or so. So that would be telling you really got volume moving to the downside. Now, you want to go ahead and benchmark that against the last time there was any real move volume-wise to the downside. That takes you into April 5th, 159 million shares out there. Still, though, if we take a look at the SPYs, you can take a look at this little rising price channel that it's been traveling in ever since those November 16th lows out there. Rather narrow narrow banded range out here. Right now, your first level of support on the SPY is coming right at the swing point. I'm using the April 2nd swing point out there. Why? Because you had a nice big bearish engulfing candle on that following trading session. So that says 157.21. So far, the SPY has not gotten down there. You see that little blue line, that squiggly line? That is the Basil Chapman Johnny Cash 9-period EMA, walking that 9-period EMA line. You can see that still holding. What we can also see, the 157.52 number, that is the October 11, 2007 swing point, 233 million shares back there. So far, that has been tested. So just like the S&P testing 1576.09, the SPY here testing the 157.52 area. So now what you can benchmark against is the 233 million shares. Yes, got up over that level with volume, but if it pulls back into that swing point, tested on lighter volume, closes back above it, now you'd have a rejection on the SPY of that all-important 2007 swing point out there. So your number on the S&P is 1576.09. Your number on the SPY, 157.52 out there. Again, 233 million shares. Let's go take a look at the diamonds here, see what we have with Lucy in the sky with diamonds. The DIA trading out right now at 147.61 out here. The diamonds trading also inside this rising price channel out here today, forming a little bit of a bearish candle, bear separating line. So of all of the candlesticks out there, this is the most bearish. But let's take a look at what we've got going on volume-wise. So far, the diamonds have done 2.4 million shares. We'll do the same thing and peek in on the 10-minute chart. Let's see if we've got steady buying and selling going on, steady volume here inside the diamonds like we do the SPY. So at the open, the diamonds here during that first 10 minutes, 546,000. The next 336, the next 475, the 70, the next out here 213, 140 during the 240, I should say, during that 10:30 session. You got quite a bit of time here left. So 141,000. So you got some pretty decent volume inside, steady volume, I should say, inside the diamonds out there. On the daily chart, on the daily chart, as we go back and take a look at that, you can see here the real resistance, or support, I should say, my apologies, support. April the 2nd out here, that is the high of 146.50, quite a ways away from that. That's got 5.6 million shares. So that's the support line inside the Dow Diamonds. If we take a look at the IWM out here, let's go take a look at the weak link in the chain. The IWM here having a little bit of a high wave candle on Friday. The IWM moving down this morning has done 13 million shares coming into that volume session from April the 5th with 46 million. So it's actually moving into a swing point low with accelerated volume, because that's 46 million. You've already done 13. That should be easily be able to take that level out. So watch the high of 91.75. That's April the 5th. If you are short, you want to see it get inside there with more than 46 million shares. That would be setting up a small A to B equals CD down here. Your A point on this would be the swing point from March 15th. Your low would be that April 5th level. So that would say 90.16. It's almost really just a 100% move of a move out here. Now, what you're really also watching on the IWM really is the gap up from March the 4th. That high out there is 91.17. So 91.17, that level has held as a support area. It looks to me like that's where the IWM is headed to. Let's go peek in on the Qs here, and then we'll go out to Crestview, Florida. So as we take a look at the Qs, just like the NDX, running into that resistance line set up by the gap down on September the 25th. Now, the Qs here did volume of 41 million shares on Tuesday of last week. Yeah, Tuesday of last week. The Qs made the move with 55 million shares into that level. So 55 going into 41. They were taking that area on with volume. Next trading session, 37 million shares, and on Friday, 32 million shares out here. You can also see the rising price channel, but the Qs running into some significant resistance. But they took down that area with volume. So inside the Qs here, what you really want to be paying attention to is this wide-bodied candle. Take a look at this here. You've got two small bodies. Today also a small body as well inside the Qs. If any time over the course of the next couple of trading sessions you see it close above $70 and a penny, that is telling you you've got a continuation, and really on the NDX 100, the same on the Qs. It broke that 0.786 Gartley sell pattern. And usually those turn into butterflies out here. So watch the continuation pattern. You got the perfect candle set up right now to be paying attention to it. Of course, that totally goes by the wayside if you see it close below 68.89. 69.57 is where the Qs are trading right now. Let's go out to Crestview, Florida, to Ted. Ted, thanks for calling. Thanks for holding. How are you doing?
Pretty good.
Excellent. Excellent.
Looking at the XAU, is this thing headed back to the October of '08 lows?
Well, let's go take a look at the XAU. The XAU here, what the XAU is doing, the easiest way to answer that question is this should find support somewhere in the 99.73 to 106.23. You're trading at 106.61 right now. And if it breaks through this area here, then the answer is yes. And I'm looking at a weekly chart. If you're following along on Tiger TV, this is really a beautiful weekly pattern out here, and it's a buy pattern. Now, that doesn't mean you go in and you buy right now. In fact, you do not. This is the weekly chart. We'll switch it over to a daily chart. But what you've got here is you've got with nice Leonardo Fibonacci. You ever pay attention to the Fibonacci numbers, Ted?
Yes, I do.
Okay, so on this one here, this has set up a very nice Gartley buy. Now, it has to confirm by getting the bulls to start coming in on this. And so this here on a weekly chart, you've got a nice 1.61 expansion. That's off of the low here from May 18th all the way up to the high on September 28th. You've got a 0.786 retracement, which is in the area of 99.73 to 106, where it's trading right now. So you've got nice Fibonacci retracement there. It is also in very, very oversold territory, just using our relative strength, in this case here, relative weakness indicator. And the last times down here, it has formed a decent bottom. So on the now, if this area fails here, this will then absolutely go down into the 2008 level, which is right around, and on the weekly chart, is somewhere between 95.34 all the way down to 63.52. Once it closes inside 95.34, that's where it sets up the move down to the actual lows. Now, let's take a look at a daily chart on the XAU out here, and on the daily chart, it's just made a 2.618 expansion of a set of swing points, which was April 4th to April 9th out here. But here's how you play it. Are you looking at this as I assume you're looking at this as a buy, or are you short the XAU?
No, I'm not short. I've got rid of quite a while ago, and I'm looking to get back in some stocks now.
Okay.
Plus, the volume today is really huge volume. I'm wondering if today's kind of a blowout day.
Here's what I would suggest that you do. I have never seen a market either reverse at the top or reverse at the bottom without a reversal candle showing up. And that's really all that you need to wait for. On a pattern like this, if I go back to the weekly chart, this shows you where patience will work. I mean, you got to have money management strategy for sure, but patience, and you do not need to try to buy the bottom tick. What you want to do is, in my opinion, you want to just be like a race car driver. You want to just draft behind, the leaders out here. In this case, you'd be looking for bulls, and you'd be looking for a bullish candle. And if you take a look at that weekly chart, as soon as the bulls do show up, if we go back to 2008, we'll see we'll see some bullish candles as the XAU was making its lows down there. Back at the 63.52 range. So just simply wait for some type of bullish candle reversal signal before you go ahead and hop into this. Because if this is making a significant low, you've got a lot of time. If this 0.786 Gartley pattern were to hold, just as an example, inside the XAU, so we'll do the what if, and let's say it's right in this area here, you would see a bounce, a minimum, a bounce from 106.40 where it's at right now to 154.70. So you don't have to buy the bottom tick here, and my suggestion is don't try to do that.
Yeah, I'm kind of waiting for some kind of signal at the bottom too. I understand what you're saying. So.
Yeah, I think it's a great place to be looking around, because it seems like everybody is throwing, what you'd really love to see, gold making its bottom too. And so I think you could see another washout day. I mean, if we take a look at here, I'll put the monthly chart of gold, the continuous contract, up on my chart here right now. Now, the month is not over, but take a look at that candle. Take a look at this candle here, during the month of April. You talk about wide-ranging bars. We haven't seen it now. The month is not over, but that is one huge wide-ranging bar. And the next stop on gold on the monthly chart, the 1-to-1 A to B, or the 1-to-1.272, takes you to 1290. And 1290, 1270 is the range. When you break out a consolidation area, all you have to do is take the consolidation range and subtract it from the lows. That takes you into the 1270-ish range. A 1-to-1.618 takes you to 1152. So I think that I think that we'll be able to time them both, Ted, at the same time. And the selling, just it's not over inside gold. How would you like to be Paulson today?
No, he's probably run out of Maalox already.
No, man, talk about a world of hurt out there. So, a reversal, when a reversal does take place, you will see you'll see a bullish reversal signal. It's really just that simple. So I think just be patient here. Just be patient, and I would be going and taking a look at gold stocks and really be paying attention to the volume today, the volume over the last week, and see what it's running into, and try to find things with nice high volume, untested highs out there as well. I think that's probably the next place to be paying attention to.
Yeah, I'm watching. Like I said, I'm waiting for that signal at the bottom, but I just wasn't sure if this was for sure heading to 60 or where it was going. So I appreciate the advice.
Hey, no problem, and thanks for calling. Thanks for listening.
Okay, thank you.
You bet. Oh, you're welcome. You're welcome. So let's go take a look at some of these equities here that are moving in the marketplace. Let's see. So you've got. Let's see. What do we have? What I've got showing up on my screen here. Mostly a lot of the ETFs. All the. We took a look at gold. Let's go take a look at silver out here. Let's just go finish that up, and then we can take a look at some stocks. So take a look at silver. You're talking about massive volume today, big volume, already 138,000 contracts. So on silver, we'll go take a look at the weekly chart. I mean, take a look at that. Those two candles out there, those are some wide-ranging bars for sure. If we take a look at the weekly chart on silver, the weekly chart on silver says $17.26-ish cents out there right now. You're cruising through the 0.618 retracement off of the lows going back to 2008. Ted's looking at the 2008 time frame. We're looking at the 2008 time frame, either to use that as a benchmark for some patterns, some buy patterns, or simply an area where an equity or the index, the ETFs, whatever it is you're looking at, could be making a 100% move of a move. That means going back to its starting point. Don't pass go. Just simply go straight to jail or go all the way back there. Now, 24.22 is the 0.618 level. 0.786 happens to be $17.26 out there. And on the weekly, on the daily chart, if I pull that back up here on this screen, what you're going to see is what silver did was traveling in that sideways consolidation area, a little over $9 consolidation range. If you take $9, subtract it from 26. My easy math says that's $17. So we've got a number of patterns here that just simply are confirming that what silver wants to do is move down to about $17, gold into that $12.70 range, and that doesn't mean when it gets down there, or if it gets down there, that you have your buy order in. You don't do that. Just simply wait for some type of bullish candle. Of course, on silver, what we know, silver breaking that hammer candle from September 26th out there. And, of course, if you're long, you're wrong on silver. That is on the hammer candle from September 26th. 877-927-6648. That S&P trading at 1580.48. Those are some very stubborn bulls out there defending that 1576.09 area. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and of course, it is all about the S&P 500 at 1576 out there, but of course, gold right now down $137, trading out at $13.64. Now, of course, what I heard a lot in the media over the weekend and even some this morning was that it was all Cyprus's fault. Folks, the entire country has 418,000 ounces or so. We'll call it 420,000 ounces of gold. That is not what pushed gold over the edge out there. Would not want to be Paulson or one of his funds out there, but we'll find a way to take advantage of this by waiting for patterns to complete, by waiting for bullish candles to show up. If we take a look at earnings out here today, earnings after the market, nothing real big, but things really start to kick off tomorrow. By the open, you've got BlackRock, Goldman Sachs, Johnson & Johnson, Coca-Cola, Ameritrade. After the market closed tomorrow, you've got Yahoo out with numbers, Intel, CSX Corp. So tomorrow should be a good volatile day. On Wednesday itself, let's see, by the open. Bank of America will have their numbers out by the open. SanDisk, Select Comfort, which, not big, but I know that those bed manufacturers, those mattress companies, they tend to get pretty volatile when they release earnings. eBay as well, with numbers in American Express after the market closes tomorrow, on Wednesday. And then on Thursday out here, big day, you've got Google out with earnings after the market. IBM, Intuitive Surgical, that should be a fun one to watch. You've got Microsoft out with earnings as well. Advanced Micro and Chipotle after the market closes. Thursday before the market, let's see, I show AutoNation. And so big week here for Verizon, United Health Group. So big week here for earnings. Let's go back into take a look at let's go into the spiders here. Let's go see what's going on inside the S&P. So if you take a look at the energy sector now taking on the XLE, taking on the swing point from February 26, 17 million shares there. So far today you've done 7 million, so it's taking that area on with volume and getting all the way back now, truly inside the bottom part of its range by getting below the September 14th 2012 swing point. Now, the reason why we're not taking a look at the XLE and taking a look at 2007 because it never got anywhere near the highs out here. The highs were actually put in May back at around the $90 price range. So it's only made about probably a 0.786 retracement of that area. But right now, the important things to be watching, you do see the XLE moving into its most recent swing point with volume, and truly it closed back below 76.02. You're at 75.95. That is truly back inside the lower part of its range. The XLE, a significant weighting inside the S&P 500. The XLF, though, that is being a little stubborn mule out here. That is really not moving at all. In fact, if anything, it's moving just a tad higher. Closed out the session on Friday at 1847. You're at 1850 right now. So that is not giving it up, not giving up any information to us other than that is being stubborn. The material sector, the XLB, that is taking on its most recent swing point. That had formed a nice 1.272 butterfly cell pattern. It completed that pattern all the way back in January of 2013. That level has held. Normal retracement of a pattern like that would be the 0.618 level. That looks like that's where the XLB wants to head to, right around $36.57. Did volume on February 25th of 13 million shares. Today, it has already done 4.9 million shares, only an hour and a half of trading. So you're seeing volume coming out of that balloon as well. Let's go peek in at the, I can't peek in at the technology sector because our time is up. But stay tuned. It is a marvelous Monday. That means Basil Chapman is up next. Following Basil, we got our man Larry Pesavento, Daryl Martin after that, David White, and then the Tom O'Brien Show from 4 to 6. Thanks so much for being here, folks. Have a wonderful Monday, and I'll look forward to seeing you in the morning. Take care.